Guys, can you hear me? Yeah, what is the journal entry for this? Just a sec. Raj commenced. You can see my screen, right? Yeah, Raj commenced a business with 50,000 rupees capital. This is a very basic. And can you guys tell me what will be the journal entry for this? Very basic.
The capital account, cash account, bank account, sir.
Sorry?
Capital account to bank account. Capital account debit to bank account.
Capital account debit to bank account. Okay. So, yeah, Tisha, you can tell me?
It's a cash and bank account debit to capital account.
Cash or bank account to capital account. Can you tell me why?
Because cash and bank is assets for us, and capital is liability for us,
So,
for our business. Because owner and business have separate legal entity, and
Okay.
that's why our business owners fund is like a loan and type of liability.
hmm.
And as per accounting rules, assets are debit and liabilities are credit.
Okay. Very good. So there is something called as rules of debits and credits, right? So this is a basic. If you have forgotten, right, make sure you write this because we are going to keep on using this in entire accounts. So rules of debits and credits. So what should be debited? What should be credited? So if it is an asset normally shows debit balance. If you want to increase it, you debit it again. If you want to decrease it, credit it again. Okay. Just a second. I think I should do something about this. Can you guys see my messages also? Just give me a second. Just give me a second. Why some people are unable to enter? I don't know. Okay, fine. So since it's a first class, we're just taking a little bit of time. Then we're gonna figure this out from the next classes. We're gonna there won't be any wastage of timings. Yeah. So asset normally shows debit balance. If the assets are increasing, Okay, then you have to debit again. If the assets are decreasing, then credit it. Okay, then we have liabilities. Yeah, sorry. Yeah, so liabilities normally shows which balance? Credit balance. If it increases, you will credit it. If it decreases, you will debit it. Expenses normally shows debit balance. Income shows credit balance. So these are the basic things we have to learn in accounts. I'm sure most of the people might have already known this. Now, capital, like one of our students said, capital is a liability because of this separate legal entity concept. Owner is separate and then business is separate, so we'll consider this as a liability. And commenced with 50,000, let's just say cash or bank. So this both cash or bank is a asset. Now asset is increasing because business is getting cash, so asset is increasing, so debit it. And then at the same time, that is not the business cash. The business that cash belong to Raj, owner. We need to give it back to the owner. Whenever the business closes down, we need to give back to the owner. So that is the reason we have to debit it, credit it. Why? Because liability is increasing, so we have to credit it. So that 50,000 is both asset and liability. This messages is very disturbing me. Just give me a second, guys. Yeah, fine. So here also we are issuing shares. Why do we need to issue shares? Anybody? Why does company issue shares? You don't need to raise your hand, you can just directly tell.
To raise capital.
Very good. To raise the capital. Is there any way, like, is the shares is the only way, or can I issue any other instruments?
Debentures, sir.
Debentures, preference shares,
Securities.
bonds. Very good. So any kind of securities. Securities is a broad term which we're going to discuss in the capital markets. So the main reason I'm doing this, to get the money, I want my money, right? I want money. So basically I want capital, and obviously bank balance. So in a balance sheet, if you prepare a balance sheet, if you're 100 rupees capital, 100 rupees bank balance, this is the starting position of the any balance sheet, right? So let's just say I got 100 rupees capital. What do I do with this? I'm gonna buy assets. Let's just say I'm going to buy furniture with 50 rupees. Then my bank balance will become 50. So this is how the balance sheet will be there. So we will issue shares to raise the capital. So what I'm trying to say here is the ultimate entry will be this one: bank account debit to share capital account. Bank account debit to share capital account. Remember this part. Bank account we are debiting because asset is increasing. Share capital we are crediting because liability is increasing. When asset increases debit, liability increases credit. Okay. Now whenever we issue a shares, let's just say there is a face value of 10 rupees. We are going to collect this 10 rupees in installments. One is application, another one is allotment, another one calls, first call, second call, third call, any number of calls will be there. So these are installments. So this 10 rupees only I am collecting in a installments. Okay. Now for every installment you have to write a journal entry. So the procedure will be like this. So we're going to issue something called as prospectus. Prospectus is like your college brochure. What will be there in the college brochure? Like, we have good faculty, we have good labs or whatever it is. Who are the directors? Who are the teachers for the for that particular college or school? So you're gonna read the brochure. If you like it, you're going to join it, right? In the same way, in the prospectus also, they are going to mention all the company details. If you like the company, then you are going to apply, right? So first you are going to make an application. So when you make an application, the company is receiving 2 rupees. You are going to create one dummy account called share application account. You're gonna keep money there. Okay. Then again, this application, I can do two things. I can either accept it or reject it. If I accept the application, money will go to the share capital account. Okay. See, we just discussed now what is our ultimate goal. Why are we issuing shares? To raise the capital. Okay. So now one of our one person applied and then we accepted it. So that's why that money ultimately goes to the share capital account. Now if you reject it, then you refund it. Okay. So as soon as if the shares are accepted, that money will go to the share capital account. So first installment is over. Next, second installment, which is allotment. Okay. So from here on, what we're going to do is we're going to pass two entries. One is due entry, another one is receipt entry. Why? See, as soon as we accept him as our shareholder, we will write his name in our books of register of members. We will register him as a member. Whenever he make an application for 10 rupees and then we accepted it, it's like he made a promise to us. He cannot break the promise. What happens if they break the promise? We're going to discuss later. So it's like, as if you have lended some money to him. So you have all the rights to recover this 10 rupees from that particular shareholder. Okay. Now out of this 10 rupees, he already paid 2 rupees application money. Remaining allotment money, here we fixed another 2 rupees. So this, before we ask him, right, we will pass a due entry. That means we did not receive, but we are supposed to receive, or we are going to receive. Now this I will write like this. Yeah, sorry. So due, it's like that person has to pay money to me. Can I say, like, I can consider him as a debtor? So debtor is an asset shows debit balance. It's like that. So share allotment, again I am creating one more dummy account. Share allotment account debit. Okay, sorry, I'll write the journal entries later. I am creating one more dummy account. That money should go to where? To share capital account. I am creating one dummy account called share allotment account. Now two things will happen. He will either pay it or he won't. If he paid the money, then it's fine. If he did not pay the money, then we have to discuss about calls in arrears, calls in advance, all these things. Okay, so just give me a second. because that is not very comfortable for me to write it. Okay, so first one is, it's like a college. It's like when you want to go to college, first thing what do? You will make an application. So college is going to receive your application along with the application money, receipt of application money. So receipt of application money, that means they are receiving the money, company is receiving the money. So immediately you should remember bank account debit. Now ultimately money should go to where? Share capital account. Okay, but here we don't transfer directly money to the share capital account. First we're going to put in a dummy account, bank account to share application account. Okay, now when we accept that application, from that dummy account, share application account, debit, because previously we have credited, to share capital account. Because remember, capital is a liability shows credit balance, so that's why always we will credit the share capital. Now what will happen? This one and this one will get cancelled. Ultimate entry will be the bank account to share capital account. See, this is the ultimate reason why we are issuing the shares. So in every entry, when you cancel everything, you should get bank to share capital. If you are not getting bank to share capital, that means you have done something wrong in it. Everybody clear on this? Can I move on to the next one? This is first installment. Now what is the second installment? Due entry. Again, come to our college example. So once college accept your application, they are going to allot one seat to you, right? They are going to allot a seat in your college, and then they are going to ask more fees. You just paid application money only. So after allotting, they are going to ask more fees. So this is called allotment due. You did not pay money yet. Okay, you did not pay money yet. They are just writing, I have to receive, company has to receive. This is due entry. See, the due means whenever obligation is created. Then another one is payment. What is meant by obligation is created? See, for example, I have taken let's just say I have used electricity for 3 months. Okay, I have used the electricity services for 3 months. So that means automatically obligation is created, responsibility is created. I have to pay the bill, right? It is due. Whether I paid it or not, that is a different scenario, but the bill is due. So if the bill is due, automatically in the electricity company, they would have recorded entry, right? Because we will maintain the books of accounts on accrual basis. It doesn't matter whether the money is received or not. Okay, again that part we're going to discuss in the basics. If you haven't if you haven't already learned that part, we're going to discuss there anyway. Now allotment due. So what is the dummy account here? We have to create share allotment account. Share allotment account, debit to share capital account. Okay, next. So we are going to ask the our shareholders to pay the money. Then he finally pays the money. What happens if you don't pay the money? We'll discuss that later. These are just very basic entries. So let's complete this first. Receipt entry. We are going to receive money. So bank account, debit to share allotment account. Now this one is going to get cancelled. Ultimate entry is bank to share capital. Okay, next, if it is a first call, same, instead of the word first call allotment, first call will be there. So instead of the allotment, second call will be there, third call will be there. Same entry, right? Exactly same entry, only the name changes. Can I move on to the next concept, everybody?
I have one doubt, sir.
Yes, please.
I'm just asking that if allotment and application
Hmm.
money received at the same time, then
Hmm.
what will be general entry?
Very good, very good. So here, that is lump sum. Whatever you are talking about is lump sum. So this part is we are receiving in installments. Then we can receive in lump sum also. So you can directly, so bank account debit to share application and allotment account, then share application and allotment account debit to share capital account. This one will get cancelled. Ultimately bank to share capital will be there. See, when you receive lump sum, you can directly write the bank to share capital also. You don't need to use the dummy account. You can directly write bank to share capital also. But in most of the questions, there won't be any lump sum here, right? Because they want to teach you about this share application, share allotment, share first call and second call. Okay?
Okay, sir.
Now, here, receipt of application money, this first entry and then second entry are different, but from later, from the second installment, okay, all entries are similar. Only application entry are different. Remaining from allotment, we have a due entry, we have a receipt entry. Okay, let's do very, very, very basic question. Then we are going to go to some other concept. Sam Limited issued 1000 shares at the rate 10 rupees each. Okay, and the 10 rupees we are collecting this way. This 10 rupees, what do we call it as? Face value. Now application we are collecting 2 rupees, allotment we are collecting, let's just say 5 rupees, and whatever the last call, you can have any number of calls. Okay, whatever the last call, we call it as final call also. So this is first and final call. Okay, 3 rupees. Now, can you guys just quickly solve this in your books? Can I pick anybody? Can anybody answer this?
Sir, can you please show question again?
Yes. First entry.
Sir, bank account debit to share application account 2000 rupees.
Okay. Then
Sir, share application account debit to share capital account 2000 rupees.
next.
Sir, then share allotment account to share capital account 5000 rupees. And then bank account to share allotment account 5000 rupees.
Okay.
Then share first call to share capital account 3000 rupees. And then bank account to share first call 3000 rupees.
Yes. So guys, you might think like the people who already studied this is so basic. You might have think that, but without this basic, like there is something called as forfeiture and reissue. So where we are going to do opposite of this. So if you are not sure about this basic, then you are going to face very huge difficulties over there. So if you haven't sure, like if you have by hearted these journal entries, anybody, let me know. so then I will teach it. If you already know it, so let's not waste time. We'll go to like further concepts. And also guys, like instead of sending a message, because I cannot see every time, so can you guys just speak up, okay, if there is anything. Okay, now shares can be issued at par and premium and discount, but currently shares cannot be issued at a discount. Now if it is a par, let's just say if the face value is 10 rupees, if it is equal to the face value, it is par. If it is more than the face value, it is premium. Now whatever the premium, let's just say if the face value is 10 rupees and then we have issue price is 12 rupees, this 2 rupees is going to go to separate account called as securities premium account. See, there are two type of things. One is capital and revenue. Whatever the money I have received, this I can call it as capital profit. Revenue profit means I have done some business. Let's just say if my business is selling clothes, I have sold clothes and then I have got a profits. So that is revenue profit. But here I did not do any business. While raising the capital, I got a profit. So this is capital profit. Now this capital profit, you cannot, this securities premium account, you cannot use for any purpose you desire. You have to use only for particular purpose. Around 5 things we can use the securities premium account. For what we can use securities premium account, we're going to discuss that later in a law part. Okay, so now the thing is, this is not freely available for the company to use it. So the company is liable to use it only for whatever the Companies Act will tell. So that is the thing, this will be considered as a liability. This will be considered as a liability and then it will be recorded in the balance sheet under the head of reserves and surplus. You will write securities premium. Okay, so securities premium is a liability. Liability means it shows credit balance. Okay, now again, okay, so what would be the entry for this? Anybody? First entry, receipt of application money. Securities premium is a liability. Liability will be credited.
Bank account debit to share capital account and with 7,000 rupees, and share application account debit 7,000 rupees to share capital account 5,000 and
Bank to share capital. First entry.
yes.
Okay. No. Okay. So let's write this part. Okay. I will come to that part. Let's write this. See, securities premium can be collected in two stages. Securities premium can be collected in two stages. One is either in the application stage, either in the allotment stage. Okay, so first everybody remember the basic entries and then learn the basic entries. If you haven't, okay, let's discuss that one more time again, if in case if you did not. Okay, now application. If you are collecting that extra money, so if you see here in this question, so face value is 10 rupees and issue price is 15, so 5 rupees is the premium. This premium I'm collecting in the stage of application itself. Then what would be the entry? If you are collecting the premium in the stage of application, the journal entry will be like this: bank account debit, because first entry is what? Receipt of application, right? We are receiving the money. Total how much money I am receiving? I am receiving 2 plus 5. 2 rupees is the application money, 5 rupees is the premium. So bank account debit 5 rupees to share application account 5 rupees. Then from the dummy account, sorry, just a second, 7. So totally we received 7, right? So in bank account, whenever you are writing a bank account, you just have to write how much money you received or how much money you paid. That's all. So totally I received 7. So I received 7. I'm gonna put entire money in the share application account. So share application account debit 7. Now here, always remember we can transfer only face value to the share capital account. See, out of 7 rupees, 5 rupees is premium money. So premium money cannot go to the share capital account. Okay, so it will only 2 rupees will go. Remaining 5 rupees will go to the securities premium account, 5 rupees. Bank account to share application account 7, and then share application to securities premium account, and then share capital account. Any doubt in this?
No, sir.
Okay, understood, right? Yeah, because I'm really confused here that is there anybody who don't know the basics, because I think we have went a little bit fast on this basic entries like bank account to share capital, these normal basic entries. Ayushi, okay, sure. I'll come to that part. Now make sure you write this also, and then securities premium account will be collected in the stage of allotment also. So when you collect in the stage of allotment, first you have to write a due entry in allotment, right? So while writing the due entry, share allotment account debit total 7 rupees. Okay, I think I haven't mentioned in the question. Let's just say same question, if it is you are collecting in the stage of allotment. So assume that allotment is 3 rupees and then premium is 5 rupees. So total 8 rupees. This is premium part. So share allotment account debit 8 rupees to share capital account. Only face value, always remember only face value can go. Face value is here 3. Then to securities premium account. To securities premium account 5. Then again receipt entry. This is what? Due entry. Now receipt entry, assuming that everybody paid correctly, bank account debit, totally we are supposed to receive 8 to share allotment account 8. So this one will get cancelled. Remember, share application, share allotment, share first call, share second call, these are all dummy entries. So that means this should get cancelled. That should not be there in our books of accounts. So this is the journal entry when you receive the premium in the stage of allotment. Have you guys recorded this? Hello. Yes or no? I have to move on, right? Yeah. So what happened? Like, is it possible to speak, because I cannot see the messages? Please speak. Okay, now. So securities premium account can be received in the stage of application, securities or in the stage of allotment. If it is received in the stage of application, different entry, allotment, different entry. So make sure while writing the due entries, it is including the premium. Okay, so just a second. I think this is not working. What we're gonna do is, because I cannot move on if you guys, even if one student does not know the basics, because in the for future reissue that won't be good. So we have here Harish, Aishi, Priya, Keshav, Maheshwari, Pooja, all these people. So can you guys unmute everybody? Unmute everybody, unmute it, or like whenever I call your name, you unmute it. Okay, so Priya, are you there?
Yes, sir.
Keshav?
Yes, sir.
Pooja and Sanjana?
Yes, sir.
Okay. Yeah. Now, what is the first entry? Before that, 10 rupees is the face value of the share. Okay, so basically we are selling shares to the public and then we are collecting money. Each share value is called face value. See, we can fix our face value, maybe 10 rupees or maybe 1 rupee or maybe 100 rupees. Normally in all our questions it will be either 10 or 100. Okay, so here the question is not about that. Okay, we are issuing shares or we are selling shares and then we are getting money. The problem is we are collecting in the stage of installments. Okay, and then that installments we need to do accounts for it. So first one is, whenever they want to buy our shares, they will make an application. Whenever they make an application, we will accept it or we will reject it. Same like whenever you want to apply your college, they will either accept your application, they will reject your application. After accepting your application, what they will do? First thing they will ask, pay the money, pay the fees, right? So you will pay some money. So here, after allotting the shares, right, accepting the application, that means I will be allotting shares to them. So immediately we will ask some more money. Okay, after that, whenever the company require, we will call them, like in your college, first semester, second semester, third semester, like that. Here, first call, second call, third call, like that, any number of the calls. So basically this 10 rupees they are collecting in a various installments. Now every installment has a name. Okay, every installment has a name. Now for all those things we need to write a journal entry, and remember this, all these installments are dummy accounts, because ultimately whatever you write, we require money. So that means our bank account should be filled, our capital account should be filled. Only these two accounts matter, remaining all are dummies. Everything will get cancelled. Now start with Sanjana, I guess. Receipt of application money. We are receiving the application money. What is
Sir,
the journal
bank
entry?
account to Sir, bank account to share application account.
Okay,
And
bank
then,
account
for
to
it-
share application account. Yes.
So next entry is share application to share capital account.
Okay. So Ayushi, so I'm receiving the money, I'm putting in a dummy account. What is dummy account here? Share application account. Okay, so now let's just say I have received 2 rupees, 2 rupees. Next, I will accept the application. Whenever I accept the application, money should go to share capital. Are you sure you following? I don't know, for her only I'm repeating, she is not responding. Okay, Sanjana, what is the journal entry when you reject it? Sanjana, are you there?
Yes, sir. So share application account debit to bank account.
Okay, so if you accept it, the money will go to the share capital. If you reject it, the money will go to the bank, refunded. So our bank balance will decrease. Bank is an asset. When asset decreases, you will credit it. Share application account debit to bank account. 2 rupees. So this is when it is rejected. This is when allotted or accepted. When we accept the application. Okay, next. Now due entry. Priya Gautam. Allotment due entry. Harish. Pooja.
Share allotment to share capital.
Okay, why? Why we are crediting the share capital account?
So because this is, as you said, this is a dummy account.
No, share
No,
capital
no,
is
no,
not
sorry,
dummy
sir.
account.
Share allotment is dummy account.
And we need to receive the money, so it's like a
In
debtor.
bank
So
account,
that's
yes.
yes.
Bank
Okay.
to share allotment. Next entry.
Okay, bank account debit to share allotment account. Okay, so remaining for the first call, due entry will be there, receipt entry will be there. Second call, due entry will be there, receipt entry will be there. Just change the name. Right? Now, again. Okay, Pooja, you tell the answer for this. So we are collecting allotment money 3 plus 2. Okay, 2 rupees is a premium. First due entry, next receipt entry.
Share allotment to share capital. Then bank account debit to share allotment to
Okay,
securities.
so here itself, like I said, share allotment account debit to share capital. How much money here?
7.
No,
Huge
no,
amount
this
of
one.
share.
No,
Sorry.
this one,
5. Sorry.
right? So share allotment account debit 5. Then what?
Then share capital.
Share capital.
To share capital. To share capital. Yes.
Okay, how much money?
5.
Yeah, see, that's the mistake here. We should not transfer premium. In this 5 rupees premium is there, right? This premium will not go to the share capital. Only face value. What is face value here? Allotment money is only 3 rupees. So only, always it's a rule, only face value will go to the share capital. Nothing less, nothing more. So only 3 rupees will go. Remaining will go to the securities premium account.
Okay.
Securities premium account 2 rupees. Okay, next, what will be the receipt entry? Bank
to share allotment.
Bank to share allotment. How much money?
5
Bank account debit 5 to
to
share
share
allotment account 5, right?
Yes.
Okay, next again, who else is there? Who else can answer? Anybody? Or not only can answer, like who are available? Okay, now can you tell me what is the journal entry?
Bank account debit to
Hmm.
share application
With number. Bank account debit what number?
6
Bank account debit 6 to
to share allotment.
no, we are in the application now.
Application.
Hmm. To share application
Application.
account 6 rupees only.
Yes.
Okay, next.
Share application account debit to share capital.
Debit 6 rupees
Yes,
to
to share capital to and share securities premium account debit to 4. With 4.
okay, to securities premium account 4. Now understood, right? So say premium can be collected in 2 stages. Either it can be in the stage of allotment, either it can be in the stage of application, right? So this is important whenever we make a forfeiture. Okay, this is going to play a role there. So that's why it's important to note this. Next point. So if somebody did not pay the money, okay, if somebody did not pay the money, we call it as calls in arrears or arrears. If somebody pay in advance, calls in advance. Okay, so what does that mean? Due but not received. Received but not due. Okay, and calls in arrears is an asset. It shows debit balance. Calls in advance is a liability. It shows credit balance. Why? Like I told you in the beginning, whenever they make an application, let's just say face value is 10 rupees, they make an application to us. Whenever they make an application to us, they are promising that they are going to pay 10 rupees. Let's just say they paid application money, they paid allotment money, so total they paid 6 rupees, and then we call the first call. First call they are supposed to pay 4 rupees, they did not pay. They are breaching their promise. Now we can do everything, like when you take a loan from the bank, what they will do, like the same thing we can do. Now this 4 rupees we are supposed to receive, but we did not receive. It is due. Due means, I told you, right, the obligation is created. Like if you use electricity bill, then you have to pay because electricity bill is due, obligation is created. So now if we don't, because if we did not receive this 4 rupees now, maybe we are going to receive in a future. We are going to receive, we are going to get a benefit in future. So that is nothing but asset only, right? So that's why it shows debit balance. Now calls in advance, it is not even due. Obligation is not created. It's same like prepaid insurance, rent paid in advance, you might have done in 11th and 12th, right? So it is a liability, because let's take some other example. Let's just say I paid rent for 12 months in advance to my landlord. So if you think from my landlord point of view, it is a liability for him because he need to provide shelter to me for 12 months because I already paid money. He received in advance. So whenever we received in advance, for us it is going to create an obligation. So that's why it's a credit liability. Liability shows credit balance. Anybody has a doubt why it is a asset, why it is a liability, let me know. Okay. So calls in arrears is a asset, calls in advance is a liability. Liability shows credit balance, asset shows debit balance. Now again, let's take this example. Sam Limited invited 1000 applications and at the price of 10 rupees each. At the price of 10 rupees each. Issued at 12 rupees. Issue price is 12 rupees and then application is 2 rupees. Allotment is 3 plus 2. First and final call is 5. Now Raj, a shareholder who had 100 shares, did not pay first and final call, 5 rupees. So what would be the entry for it? Again, start from the beginning, one by one. Tisha,
Yes, sir.
can you answer?
स्टार्टिंग एप्लीकेशन की अपन एंट्री करेंगे तो होगा बैंक अकाउंट डेबिट टू शेयर एप्लीकेशन विद 2 rupees
Yeah, go on.
and then share application account debit to share capital 2 rupees. Then allotment account की एंट्री होगी share allotment account debit to share capital account to security premium account and 5 rupees से हम टू शेयर अलॉटमेंट अकाउंट की मनीज डालेंगे और शेयर कैपिटल में 3 rupees की होगी और शेयर सिक्योरिटी प्रीमियम अकाउंट की होगी 3 rupees से होगी हमारी शेयर कैपिटल की और 2 rupees से होगी सिक्योरिटी प्रीमियम अकाउंट की.
Okay.
देन फाइनल कॉल करेंगे जब कॉल तो ड्यू मनी जब कॉल करेंगे वो तो पूरे 5 rupees से करेंगे बट जब एप्लीकेशन मनी रिसीव होगी तो कॉल्स इन एप्लीकेशन फाइनल अकाउंट ये फाइनल कॉल की करेंगे तब होगा फाइनल कॉल अकाउंट डेबिट टू शेयर कैपिटल अकाउंट विथ 5 rupees एंड देन no.
Yeah, correct.
Then bank account debit to calls in arrear account debit to final call.
Two calls in arrears. It's calls in arrears. Just now we discussed it is an asset. Asset shows debit balance. So we don't debit the credit the calls in arrears account. We debit the calls in arrears account.
Yes, sir.
Okay. So just a second. So you said first one due entry will be share first and final call account debit 5 rupees to share capital account 5 rupees,
5.
right?
Yes, sir.
Now while writing the receipt entry, bank account debit. Now tell me how much money. Bank account debit.
100. We debited bank account debit 4,500 rupees with and 500 rupees calls in arrear हो जाएगा.
Very good. So calls in arrears account debit 500. Then
to share final first and final call account 5,000
very
rupees.
good, very good. To share first and final call account. So then this one will get cancelled. So what you have to understand is, whenever there is a calls in arrears or calls in advance, it does not affect the due entry. It will only affect the receipt entry. Okay, either you have received in advance or either you did not receive the money. So that's why the due entry, no change at all. The only change will happen in receipt entry. Okay, very good. So let's write these entries very quickly, or if you guys are very sure about the entries or whatever she told, if everybody understood, we can go to the next one. How many people say we can go to the next one? Keshav?
We can go to the next one.
Yeah, I know you understood that. What about the remaining people? Pooja, you understood? Okay. Sanjana,
understood.
very good. So you just do one thing. If anybody did not understand, if you want me to write the answer, let me know. I'll write the answer or I'll go to the next one. Oh, okay. Okay, let me write very quickly. So receipt of application money, bank account, debit to share application account. So how much I received? Application money 2 rupees. 1000 applications are there. 1000 into 2, 2000, 2000. Then I have accepted the application. So first I put that money in a dummy account. Then from the dummy account, share application account debit to share capital account 2000, 2000. Application part is over. So this one will get cancelled. Ultimate entry will be this. Next one, allotment due. While writing the allotment due, I am collecting allotment money 3 rupees. 2 rupees is the premium. Okay, so premium means the premium money we should put in a securities premium account. Securities premium is a liability. Liability shows credit balance. So from allotment we have to write 2 entries. One is due entry, another one is receipt entry. Now share allotment account, debit 1000 into total I am receiving 5000. See here, remember this is very important, including the premium. That's it, right? So 3 plus 2, including the premium I need to receive while writing the due entry. 2 share capital account. Again, this is very important. Only face value will go to the share capital account always, which is 3 rupees. Okay, so 3000. 2 securities premium account 2000. Okay, this is receipt entry, sorry, due entry. Everybody paid money in this, so we don't need to worry about it. Next, receipt entry, everybody paid. So bank account debit, totally how much money we need to receive? 5000. Everybody paid 5000. To share allotment account 5000. Again dummy account get cancelled. Next, first call. So here again write a due entry, share first and final call account debit. How much? 5 rupees, right? So 1000 into 5, 5000 to share capital account 5000. Then receipt entry, everybody paid. Out of 1000 shareholders, only one person did not pay. A person who had 100 shareholders, he did not pay 5 rupees. So that means 500 we did not receive. Remaining 4500 we received it. So bank account debit 4500, and then whatever we did not receive, again we are going to create one more dummy account called as calls in arrears account debit, that I'm gonna put that money. So whatever we did not receive, we have to create one dummy account calls in arrears account, and then I'm gonna put the money in that to share first and final call account. Just a second, guys.
So,
Yeah. Is somebody speaking? have some USB connection. So yeah. So to share first and final call account 5000. So now this one and this one will get cancelled. So this question is over. Ayushi done? Okay, remaining people.
Yes.
Again. What's her name? Yeah, Tisha.
Yes, sir.
Now let's make some modification to this question. Can you able to answer it?
Yes, sir. I'll try.
Yeah. So there is Ram, a shareholder, who paid first and final call money along with allotment money. Now obviously everything is same, okay, then there will be, you tell from the allotment entry. Application money there is no effect, so leave that. So you tell from the allotment.
Then entry will be share allotment account debit
Hmm.
to share capital account.
1000
With-
into 5
1000
5000. Yeah.
Yes. To share security premium account.
Okay.
Okay. Then second entry will be bank account debit to share capital account.
Hold on.
Share allotment account.
Hold on. So whenever you are telling, you tell with the numbers as well. Okay. So
Okay.
now you have told share allotment account
Debit.
debit
With
5000
5%.
to share capital account
To share capital account 3000.
to securities premium account
2000.
Yeah. Now tell the receipt entry.
Then bank account debit.
Hmm.
Bank
How
account
much?
debit to call money 5000. It will be 5500
Okay. 5500 because
because of calls in advance.
think again. Both are there. Raj also is there. Ram also is there.
Oh. Along with means both Raj and Ram continue question will continue.
Yeah, it's a continue question only.
Bank account debit to share allotment account with 5000 with 2000.
How I?
Let me think.
So the entry will be bank account debit to calls in bank account debit calls
Bank.
in
Okay,
arrear
bank account debit.
calls in arrear account debit
Okay.
to share allotment to calls in advance, and the amount is 500 in calls in arrear and 5,000 in bank account share allotment account. Sorry, ये कितना है? हाँ 5 है.
Okay. Now, you see here.
Calls
Okay, you can tell. You able to tell?
so 500 in calls in advance.
Okay, 500 in calls in advance.
500 in calls in arrears,
Okay.
and 5,000 in bank, and 5,000 in call share allotment.
5,000 in bank and 5,000 in share allotment.
Yes.
That's it. Yeah, correct. So now if you see in bank account, so total we are supposed to receive 1,000 shares into 5 rupees. So we are supposed to receive 5,000. Okay, but what happened here? Ram paid 100 into 5 rupees, 500 rupees paid extra. So you will add it, it will become 5,500. Then again here Raj, who did not pay, wait, Raj paid the allotment money, right? Why does it will be 5,000 only? Raj did not pay the first and final call. Raj paid the where are we now? We are in the allotment only. Why does calls in arrears will be there in allotment?
Yes, I'm just think that why calls in arrear are added in that debited.
Okay, there is no calls in arrears because if you see Raj did not pay first and final call. Okay, and then Ram paid first and final call along with the allotment money.
Okay.
Okay, yeah. Tisha,
Yes, sir.
can you able to tell now?
Bank account debit with 5,500.
Bank account debit 5,500. Okay, now let's see here. It's simple. See, we are in the allotment only. Think about allotment only. So 1,000 rupees into 5,000 we are supposed to receive. But this guy Ram paid advance. Okay,
Yes.
for the first and final call, advance is 500. So total we received only 5,500. Okay, then bank account debit 5,500 to
Share allotment account 5,000.
share allotment account 5,000 to
Calls in advance
calls in advance
500 rupees.
500. Good. Now if you are able to tell the next entry. Okay, next entry is what? First and final call, right?
Yes, yes.
Yeah.
Share for first and final call account debit with 5,000 rupees
Yes.
to share capital account with 5,000 rupees.
See, the due entry does not get affected by any of these things. Okay, so we
Yes.
just write plain one. Share final call account debit to share capital account 5,000 5,000. Now while writing the receipt entry, it is important. While writing the receipt entry, now you tell me here. So what's happening in the receipt entry?
It will be bank account debit to
Okay.
calls in advance account.
Wait, hold on. Bank account you debited. Then what did you do? 2 calls in advance.
Calls in advance.
No. Calls in advance previously you have credited because it is a liability.
Bank
Okay.
account debit, calls
Hmm.
in arrear account debit to share a first and final call.
Calls in arrears account debit. Okay, I will explain this part. Okay, see if you see here, there is a Raj, a shareholder who had 500 shares. He did not pay the first and final call. So for him, we are creating calls in arrears account 100 into 5. We'll write 500 for him. Fine. He did not pay the money. Okay, see if everybody
Bank
had
account,
pay. Hmm.
4,500.
Okay, let's go with that. Okay, we are supposed to receive 5,000 rupees as the first and final call account. Okay, we are supposed to receive how much? 5,000 rupees we are supposed to receive. Out of 5,000 rupees, this Ram already paid, right? Along with the allotment money, he already paid his money. Here we credited. So we are not going to ask him again. We are going to we're not going to ask him again. So we are if you take the RAM money out, we have only 4,500. Okay, Ram is gone. Now Raj did not pay the money, 100 into 5. So now Raj also did not pay the money. So 500 Raj. So totally we have 4,000 only, right? So bank account debit 4,000, calls in arrears account debit 500. Okay, so previously I have credited the calls in advance because it is a liability. Now it is not liability anymore because I called it. See, previously it is a liability, it is not due. It is not due, but we received in advance. Now it is due. It is not advance anymore. So from Ram we are not going to ask money again. So whatever the money we created, whatever the account we created, from that we are going to use. So calls in advance account debit. Previously we credited, right, because it is a liability. Now I am going to use money from that. Calls in advance account debit. Okay, then what else?
To share first and final call account with 5,000 rupees.
That's it. Both are tallying or not? So here we have debited. Here we have debited with 5,000. So we should credit with 5,000 to share first and final call account 5,000. So then this and then this will get cancelled. I know it might be messy little bit here, but did you guys understand?
Yes, sir.
Okay. Now, so here what happened here? First we created, whenever if somebody pays money in advance, we are going to create calls in advance account because it is not due. When it is due anymore, we are going to use money from that account. When it is due, we are going to use money. We are not going to call up and ask Ram again. So Ram pay the money again because he already paid money. So we cannot ask Ram again. So that's why it is 4,000. Did you understand how we get this 4,000? Can we do one more question?
Yes, sir.
Okay, maybe I'll write neatly this time. So you guys, I'm gonna include as much as possible. But before that, I'm going to tell one concept here. See, whenever we receive money in advance, what do we do? Tisha, what do we do whenever we receive money in advance?
Pro rata allotment.
No. That is oversubscription that we did not discuss yet. So, calls in advance, that's what we are discussing.
Yes.
Whenever we receive money in advance, we will create one dummy account called as calls in advance account. Whenever we did not receive the money, okay, while writing the receipt entry, we will create one more dummy account called as calls in arrears account. See, this either calls in advance account or calls in arrears account. When do you create? While writing the due entry or while writing the receipt entry?
While writing receipt entry.
Receipt entry. So this is a liability. Liability shows credit balance. Okay, and then this is a asset. Asset shows debit balance. Remember that these entries, these accounts will come while writing the receipt entries. Okay, while writing the receipt entries only will come. Now this can happen. Let's just say previously calls in advance, okay, received in advance. Calls in advance is nothing but received in advance, not due. It is not due, but we received in advance. Okay, later it will become due, right? It's like this. For February month, I paid this month only. If I paid in January only, I paid in advance, right? It is not due, but I paid in advance. When it will become due? It will become due in February. Let's just say we are in February right now. The same example here also. So previously in our previous example, For Ram, in the stage of allotment only, we received the first and final call. Okay, for allotment it is calls in advance. But when we are actually collecting the first and final call, what should we do? Okay. Did you get my point? What I'm trying to say?
So can you please repeat again? I didn't understand.
Okay. I'll do one thing. I'll write it first, and then I'm gonna write a question. There you will understand what I'm trying to say. But again, I'll explain it one more time now only. See, when it is not due, we created calls in advance account. Okay, in the stage of allotment only, Ram paid the first and final call. So in the stage of allotment, we created the calls in advance account. Okay, but in the first and final call, it will become due. When it is actually become due, then calls in advance account will be debited to cancel it. Previously we credited, now we debited. Again, calls in arrears account also, when we did not receive the money, when the money is not received, we created calls in arrears account. When the money is received, we don't need calls in arrears account. So previously we debited, now you credit it. Okay, now first understand, I think very easy to understand the calls in arrears account. Then you come to the calls in advance account. When you did not receive the money, what account you created? Calls in arrears account. Okay, the same money he paid after 2 months. Okay, he did not pay money now, he paid later. Then do you require calls in arrears account, Tisha? Did you understand what I'm saying?
When calls in arrear amount recover, then we credit calls in arrear account.
Yes, very good. Recovered. Yeah, you can go with that. When that calls in arrears money is recovered, then we don't require that dummy account anymore, right? So we need to cancel the calls in arrears account. Now the same goes for the calls in advance account. When the money is paid in advance, then we will credit it. Okay. Now when it is not advance anymore, because you actually has to pay now, so then you will debit it. So this advance part maybe you'll understand when I have given in the question. Okay.
Yes, sir.
So try to do this. I'm going to include everything whatever we discussed. So try to write the question also in your book. Yeah. Did you guys understood question or any doubt? So Ram, who has 100 shares, he failed to pay the allotment money, but he paid the allotment money and first call both at the same time. Any doubt in the question? Ayushi, there are two Ayushi. Are you from science background?
Yes, sir.
Okay, that would be a little bit difficult. So another one Ayushi Ja and another one Ayushi.
Sir, I am from both accounts.
You okay, fine. So Tisha and Pooja and Sanjana and Keshav.
Yes, sir.
Okay, did you guys write the question?
Yes, sir.
Okay, can you guys do it as a homework and send in the group?
Okay, sure.
Okay, so if it's not,
Sir, can you send me the group link?
Group link? Are you not in the group?
No, sir.
Then how did you join the class?
So one of my friends sent me the link.
Oh, okay. Okay, Keshav, are you also from science background?
No, sir, I am from commerce.
So you know the sheer basic entries, right?
Yes, sir.
Okay, fine. Yeah, I'm gonna share this link in the to you as well in the group. Okay. Okay, Tisha, any doubt in the question? No, right?
No, sir. No doubt.
Okay. I think I will also share this question screenshot of this question in case if you doubt, and then can you just complete it now only, and then within 10 to 15 minutes upload it, okay, in the group.
Okay, sir.
Bye. Good night, everybody.